This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's crude oil imports will likely rise only 1% this year, and the country's reliance on oil imports is projected to remain at around 70% between 2026 and 2030, according to an outlook released by state energy giant China National Petroleum Corp., CNPC. The world's second-largest refining industry is estimated to import 559 million metric tons of crude oil this year, CNPC's Economics and Technology Research Institute said on Tuesday, a level equivalent to about 11.18 million barrels per day. The projected marginal increase is in line with analyst views that demand from the world's top crude oil buyer is near a peak after a rare fall in 2024 because of rapid vehicle electrification and flagging economic growth.
Oil prices were little changed on Wednesday as markets weighed U.S. President Donald Trump's declaration of a national energy emergency on his first day in office and its impact on supply. Brent crude futures rose 9 cents to $79.38 per barrel at 0420 GMT, while U.S. West Texas Intermediate crude futures inched up 1 cent to $75.84. The contracts settled lower on Tuesday after Trump laid out a sweeping plan to maximize oil and gas production, including by declaring a national energy emergency to speed permitting, rolling back environmental protections, and withdrawing the U.S. from the Paris Climate Pact.
Moving on to the top news in the energy sector.
A second U.S. withdrawal from the world's primary climate pact will have a bigger impact, in the U.S. and globally, than the country's first retreat in 2017, analysts and diplomats told Reuters. One of President Donald Trump's first acts on returning to office on Monday was to quit the Paris Agreement as part of his plans to halt U.S. climate action. The impact will be to increase the chance of global warming escalating, to slow U.S. climate funding internationally, and leave investors struggling to navigate the divergence between European and U.S. green rules.
China broke its own records for new wind and solar power installations again last year, official data showed on Tuesday, accelerating from a breakneck pace set in 2023 as the country looks to peak its carbon emissions before 2030. Installed solar and wind power capacity climbed 45.2% and 18%, respectively, in 2024, the National Energy Administration said on Tuesday. There is now 886.67 gigawatts of installed solar power, up from 609.49 gigawatts in 2023, it said. The United States had 139 gigawatts in 2023, according to the International Renewable Energy Agency. Next, we have the top news in metal market. Gold prices hit an over 11-week peak on Wednesday, not far from an all-time peak touched last year, boosted by safe haven demand stemming from uncertainty surrounding U.S. President Donald Trump's trade policies and a softer dollar. Spot gold added 0.3% to $2,751.89 per ounce as of 0502 GMT, after hitting its highest since November 1 earlier in the session and closing in on its record peak of $2,790.15 hit in October. U.S. gold futures gained 0.3% to $2,768.40. A weaker dollar makes gold more attractive for holders of other currencies. Gold is considered a safe investment during economic and geopolitical uncertainty.
The global refined copper market showed a 131,000 metric tons deficit in November, compared with a 30,000 metric tons deficit in October, the International Copper Study Group, ICSG, said in its latest monthly bulletin. For the first 11 months of the year, the market was in a 168,000 metric tons surplus compared with 89,000 metric tons deficit in the same period a year earlier, the ICSG said. World refined copper output in November was 2.34 million metric tons, while consumption was 2.47 million metric tons.
We will now look at the top news in the agricultural sector.
European Union soybean imports so far in the 2024-25 season that started in July had reached 7.91 million metric tons by January 19, up 15% from a year earlier, data published by the European Commission showed on Tuesday. EU rapeseed imports totaled 3.41 million tons, up 5% from a year earlier, while soymeal imports jumped 31% to 10.97 million tons and palm oil imports totaled 1.60 million tons, down 19% year-on-year. However, the Commission said export data for Italy has not been complete for the past 7 weeks. It also noted that export data for France has not been complete since the beginning of 2024 and export data for Bulgaria and Ireland has been incomplete since the beginning of marketing year 2023-24.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.